All right, everybody, welcome here. This is the Federal Reserve announcement decision right here. We're a few minutes away. We're going to get into lots of chart action and explore everything that's going on. Going into the announcement, I want to hear the announcement and then ultimately look at what the charts are doing. So let's quickly jump over here. We know the NASDAQ is trading lower on the day. This is on the back of tech earnings. It's basically a sell the news event. Some earnings like Google and AMD were not the greatest, but Microsoft had a monstrous move. Real quick on Microsoft, look at this move up today, early in the day. This was the first candle of the day. We popped up to $415 before selling off to $402. Huge move. Why is this important? Take a look at this. You now have a potential topping tail on the Microsoft chart. So again, topping tails are powerful, folks. We saw it on Bitcoin at the Bitcoin top, and it noted that move down, 20% drop in Bitcoin. So I'm watching this very closely. It hasn't closed for the day. Maybe we go in the opposite direction by the end of the day on the Fed. But again, guys, we're waiting on the Fed here, just a couple minutes away. But look at that topping tail. Also look at that topping tail with this trend line here. All right, look at that trend line. And then I think there was another one here. If I just bring up my chart and my drawing tool, there was this one as well. Really cool, folks. This is why I love charting. I know you guys do too if you watch me. But look at those two trend lines meeting right here. And now you have a topping tail potentially forming. Now, looking at the dollar real quick, the dollar is down slightly from this morning's game plan. We've bounced back just a little bit. Remember, ADP private sector numbers today came in weaker than expected. Now, going into the Federal Reserve announcement, this is going to be something very, very important that I focus on. So here's our Federal Reserve Fed Watch tool. Remember this morning, 50% chance basically they see a cut, or we see a cut in March now. That's different from yesterday. That occurred after we saw the ADP sector, private sector number. So again, something to keep in mind there. All right, when the Fed announces, I'm going to look at this and see how it changes. In addition, we'll check back to it throughout the press conference from Jerome Powell at 2:30. I probably will take you guys till about 2:45 today or so, give or take, before I end this live stream. So we got a long way to go compared to the game plan. This is going to be a marathon, not a sprint. Okay, so again, right now, that's where we are. Expectations, just a reminder here, guys, expectations for the Federal Reserve is that there will be no cut today. The question that we're all waiting to hear is, what is their language coming out? What's the language from Jerome Powell and Fed officials in terms of, are they hawkish or are they more dovish than the market anticipates? I personally don't think they've loved the fact that the markets keep hitting new all-time highs. I think that ultimately puts them at a little bit of a disadvantage, because a move up in equity prices in risk assets can increase the chance that inflation roars back. Remember, the CPI that just came out about a week ago or so, we saw the CPI starting to creep higher, even though the PCE number did come down. So which one's correct? Which one ultimately is going to guide us? Remember, oil has started to move back up. We've seen wheat, even wheat starting to break a little bit to the upside. In fact, the wheat chart is a very, very interesting chart here that I'm keeping an eye on. Look at this. Look at this beautiful pattern on wheat, guys. I love this setup here. Beautiful little bullish consolidation channel. We break above that right here on WEAT. That is the symbol of this ETF. I think that's a breakout on wheat. That is not good for inflation. So again, we are just about ready to get the announcement here. We're going to get rocking and rolling. As soon as I have the information, I will get it to you guys ASAP. We'll watch the reaction. I'm going to bring up the 10-year yield on the 10-minute chart here so that we can watch the reaction live. All right, so this is usually, I'm going to walk you step by step through what I look at. The 3-4 things that I look at when I hear a Fed decision. All right, I hear what they say, but more importantly, what is the market doing? What's the 10-year doing? What's the dollar doing on a 10-minute chart? How is that reacting initially? You can see the 10-minute chart this morning, big sell on ADP, and we've slowly come back. So here we go, guys. Let's see what happens here. This is it. All right, so we should be getting, I don't have the headlines out yet, but we're starting to downtick on this. Now we're starting to uptick a little bit. The Fed decision has been released. Again, I'm going to wait to hear. We're starting to rally on the U.S. dollar. Generally, that's a negative. Let's flip over to the 10-year yield. 10-year yield's popping. We are still below 4%. Man, I feel like I'm at an auction here. All right, let's jump to the markets. How are the markets behaving? The NASDAQ initially pulling back just a little bit here. Again, we'll see on that one. And I'm just bringing up here. I'm just bringing up my phone on the side so I can hear this. Here we go, guys. Let's watch this. Leaving rates unchanged. Big changes to the statement.
the funds rate, setting out the circumstances.
So making multiple changes.
Maybe you're nebulous, but maybe even a bit hawkish, depends on where you come from.
Maybe a little bit on the hawkish side here. That's why we're seeing the markets downtick and yields in the dollar pushing up.
Reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. Later says inflation has eased, but that it remains elevated.
Inflation has eased, but it has remained elevated. So it sounds like a little bit of a hawkish Fed here, guys. So again, I'm just getting out the initial statement here. So basically what the Fed is saying is that, yes, they think that overall inflation has eased, but generally they're concerned about it roaring back, which, by the way, if you look at the 1970s, this is what it did. It popped up, came down, everyone claimed victory, and then we know what ended up happening. It went like this, right? So that is the kicker. That's what, and listen, in all fairness, to give credit to Jerome Powell, he has said that for the last year, that the Fed does not want to repeat what Paul Volcker went through. So they're reiterating that right now. Again, honestly, not a huge sell-off in the markets just yet. Let's flip back to the chart of the dollar. Little bit of a pop on the dollar. Notice again, if we're looking at resistance on the dollar, we're basically just underneath this little area from earlier today. So that to me is going to be a level to watch. If the dollar breaks through there, then this could get nasty. But as long as we stay here or under, probably the markets are not going to get too panicked about this, since we're just retracing to some of those levels from earlier today. US 10-year, again, we just popped as high as 4%. That basically just gave us a little bit of resistance there at 4% even number. And then we've pulled back just a little bit. Just looking at this chart real quick, on the 10-year yield, you can see right here, pivot low right here, bring it across. We have that, and we have this area right here as well, kind of right in that upper area that we went to. So again, we've kind of jumped into resistance on a few of the metrics, the dollar and the 10-year, but as of now, we're pulling back just a little. Now, this is the initial reaction, remember. The initial reaction is just the statement. The bigger thing, and we've seen this historically, is that the bigger move comes when the press conference starts and continues, because Jerome Powell will give us more insights into what exactly they're seeing. They're going to get Q&A, they're going to get all this kind of stuff, and we'll get usually the bigger move comes at that 2:30 time frame. So until 2:30, when we start this press conference, I'm going to look at charts. We're going to go through metrics. I'm going to have Dr. B here from the trading floor join me in just a few minutes, and we'll kind of get into that stuff as well. Looking at the Qs again, a little bit of a drop there on the day. Now again, remember, Qs are already under pressure today from the announcement of earnings. The big thing, so just let's go over the Qs chart. What are some levels on the Qs to watch here? So there's a couple levels that are unbelievably important. If you want this bull market to stay intact, I'm going to go over them right now. So first and foremost, look at where the top was. All right, so again, we zoom out on this chart. We go all the way back to COVID. Pivot low right here. Right here, all right, to this high, and right to the high where we made the high. We then have this low, to this low, to this low, right to that high. Now, what's amazing is this, just a week ago or so, when this happened, I highlighted the topping tail on the Qs to you guys. Remember this. There's your topping tail right there. And look at how the market struggled, and then broke down on the Qs. The other thing to remind you guys of is, remember the semiconductor measured move, one of my favorite tools to use in markets. This is just amazing here. And again, we basically had a measured move on the semis from here to here. That is a dollar amount of about $111, $112. That exactly mirrored this, and that's why it's called a measured move. So sure enough, you know, maybe a lot of people thought I was crazy when I was talking about that, but then what did we see just going into last weekend here, which was freaking amazing? Number one, we had a daily reversal candle. Number two, if I flip to the weekly chart, what kind of candle is that? Topping tail. And then look at the semis start to come down here. We're now actually $10 off the highs of the SMH. Now listen, in the scheme of the move, is that a big move? No. I mean, it's been a huge move up. What I'm going to be curious is when we get to the Fibonacci 382 or the 50% retrace of this recent move, how do the semis handle that? Speaking of semis, let's do a check-in on NVIDIA right here. And by the way, we're going to check in on the chart of Bitcoin as well. We'll go into Bitcoin and gold. Those are obviously important. Here's your weekly, this is your weekly NVIDIA chart. What's catching my attention is right here. See how you're getting tails on top? That tells me there's distribution. That's big money selling into small money. All right, you get the tails on top. There's something called a three-tail theory. It's not formed yet. We need another candle. But a three-tail theory is one of the most bearish signals you can get in the market if you have it at the high of a chart like this. We only have 2 candles, so it's not there yet, but it is something I'm keeping a very close eye on. Let's go to Bitcoin's chart real quick here, BTC USD. And again, really what we're seeing on Bitcoin today is actually a little bit of a move up here. Not too shabby. So again, starting to see Bitcoin try to reattack this resistance line right there. We'll keep an eye on that. Let me go back to the dollar. The dollar still remains higher on the day. And right here we have the 10-year yield is still higher as well. Let's look at gold. Let's flip over to gold. Gold continues to be up on the day. Not a huge move yet on gold though. Again, I like the fact that the dollar has bounced up a little bit or gone up a little bit, and gold is still holding a good chunk of its gains. That continues to give me some bullish bias on gold, even with the markets trending near the highs here. Russell, a little bit of a sell-off on the Russell here intraday, although we are bouncing back just a little bit as well. Let me just go to the Spiders chart here, S&P 500. And the Spiders, again, actually the Spiders made a new low here. Nice little drop on the Spiders. But again, look at this. We're holding this pivot low here. Take a look at this. See this low right through here, here, and here? Basically, it's a line. And look at that. We're now back above that. So this, to me, on a closing in, this is the 10-minute chart. So keep in mind, we're really getting intraday here, intraday action. Not so much the big picture, but much more on a smaller time frame. This is what I'm following right here is we pierced, and now we're back above. If we close down here and we confirm, now you've got another leg down, because really what you have here is a bear flag, right? Look at that. Look at the flag pattern right there. So as of now, this isn't a breakdown of the bear flag. They're saving it. But if it starts to break down, you could have a measured move from here, from here to here, and then you could replicate that move to the downside, and now we're starting to break down again. So again, very interesting action here. All right. So wow, lots to go over here. Microsoft, I want to do a quick check on Microsoft selling off too. Nice little sell-off there. Continuing, if we flip to the chart, you can see we're basically back to the lows of the day right down here. Basically the same chart as we just looked at on the Spiders, right? Big down move, sideways consolidation. That is bearish consolidation unless Jerome Powell can save the day. So we'll keep an eye on that. Lastly, I'm going to do a refresh on this chart, and then we're going to get Dr. B in the mix here, guys. But again, refresh on the Fed watch tool. Let's see what it shows up. Oh, it's not even loading. There we go. We just got it to load here. I was thinking it might have crashed because everyone's checking this out. But, ooh, look at this, guys. This is big. This is big. So basically what we have here is we have a higher percentage. This was just at 50.5 for March. Probabilities of a rate cut have actually moved up for March now to 54.1%. And they've started to move up across the board. You can see right here as well. So very interesting little action there. All right, Dr. B, come on in. Let's jump over here. And
All right, Gareth. Good to see everyone. How you doing?
Right, absolutely. Yeah,
okay.
This is
Big
awesome,
day,
man.
yeah.
This is cool. This is very, very cool.
Fed kept interest rates the same and a little hawkish there. Initially, some downward price action, but then it kind of just stayed flat. So let's take a look at the Spiders now.
Still looking like it's kind of trying to come down here just a little bit, right? I mean, we're still kind of dealing with this. I was just pointing out that you have this basic level right here, which is a base point, and we're trying to, the markets are trying to decipher if they want to break to the downside or not on the charts. And right now it's kind of a 50-50. It looks like which way will it go? But again, overall, I think the bigger flag pattern is something to pay attention to, right?
Absolutely.
So what are you looking at? Have you been seeing anything that's getting your attention here?
Yeah, I saw the pop on the dollar and, you know, some movement on the 10-year as well. I just want to show a trade I was in earlier this morning. You know, New York Community Bank was down over 40%. I'm not sure if you can see my screen here. I'll just come over here. So if you take a look at this chart right here, it was down over 40% into this nice support level. And this bounced significantly. If you look at the 10-minute chart, the RSI was around like 3 or 4. So we caught this trade this morning in the trading floor, and then also a trade we had this morning on AMAT. This was down over 3 or 4%, and I had a nice trend line here Let's just see if I can put it together. I'll tell you what, I'll work on this and
Perfect.
Gareth,
Come right
keep
back
going.
here. All right, absolutely, guys. So we just closed the candle on the 10-minute spiders here. I want to put in an official line right here so we can really track this. It did close below. This is not confirmed, though, guys. Again, I know the word confirmation kind of seems a little wacky to a lot of you. You haven't learned that probably. But one thing I've learned is that institutions love to play games, and they love to whip markets and take out stops one way, take out stops the other way. So what I look for is I want to see a close below the line, but then you need a confirming candle that makes a lower low. As of now, look, they're trying to rescue it. They're trying to rescue it right here. So there's no confirmation. If it actually does confirm, that's where the probabilities move from basically being a 50-50, is it a real breakdown, to probably about a 70 to 80% chance that it's going much, much lower. So that's something I'm keeping a very close eye on right now with this. And again, those Fed Watch tools, interesting action. U.S. 10-year again, still inching up a little bit, but still below 4%. We still kind of got right back to that level here. There's a little bit of resistance right here, which we pierced here, and it's still holding underneath there. So as of now, it's not a big, to be honest, as of now, it's not a huge reaction.
No. And I think it's 2:30 is going to be the time when things really, decipher which way the market's going to go here.
Absolutely.
So, well, very good. So take a look at this chart here on AMAT. I've got the 10-minute pulled up. So there was this trend line here that came in on the 10-minute. It pierced that trend line. There was actually a gap fill down here around 160.57. This is a trade we had in the trading floor this morning. And if you zoom in even further, say to the 5-minute chart, you can see this nice falling wedge pattern. You can see the bullish divergence down here.
Hey, can you move over those so you see the divergence there?
Yeah, sure, absolutely.
So yeah, if you can really show that divergence there, because I think that's super important to look at. This is a technique that Dr. B's been analyzing, and it's been working amazingly well. Basically finding these tight wedges on a very short time frame and looking for the very short time frame divergence. And you can see right there a little positive divergence as the downslope really was pretty dramatic in terms of the selling.
Yeah.
So it's kind of one of those things you'd call obvious, right? It's not like there's no ambiguity here.
No, it's very obvious. As soon as the pattern breaks out, and you can see this break right here. Clearly, there was the break of this pattern. So yeah, very exciting trade we had this morning.
Nice, and for those of you guys that don't know, that's the live day trading room at In the Money Stocks, which will obviously be moving over to Verified Investing in a couple weeks when the new website launches. I'm on the mic live, Dr. B's on there, my head trader Ben's on there, and we basically guide and call out our trades. As we take them, we tell the live trading room, guys, we're buying this or we're shorting this. All right, we just exited at this price. And basically we have a great group of people there that follow us, and they actually, a lot of them have taken all the courses, and they participate and they give out great trades too. It's fantastic.
Fantastic, yep.
By the way, doesn't mean we don't have a loser. I've had plenty of losers, but it's all about probabilities, right?
100%.
It's all about probabilities. All right, so let's check in. I just want to check in here. A little bit of a bounce on the Russell. The Russell getting a small bounce here. Nothing again yet getting my attention. The markets seem to basically be at a point where we're just kind of waiting now. I think you're right. We have about just over 15 minutes until we get into that. Is there any other charts that you've been kind of, regardless of the Federal Reserve and all that stuff, but any other charts that you've been kind of eyeing?
Pfizer is into a really nice level here, multi-decade support. I think there was a pivot level from 1998 that we saw yesterday. I saw this chart. Let's see. So the price is right around 27.35. And if you look at this pivot low, hopefully you can see this pivot low back here in 98, okay? Actually, I'm going to go on this side.
There you go.
And just have to get used to the studio here. I'm used to the ER, not the studio. And
now he's precision cutting charts and scalps.
There we go. So yeah, you had this level right down here, 1998. Pfizer is into that level right now. There was some other support in this area too. And the other thing is it had a monthly bottoming tail. So that's a very powerful reversal signal. So this is a great area for a swing long trade. You also have this double bottom as well here. I'm not sure if you can see that. Yep. So Pfizer for sure. Yeah.
Yeah, it looks interesting for sure. And then the other one, and I talked about this in the game plan, but as soon as I read that the Chinese investors were paying up to 40% premiums to invest in ETF slash funds that invest in U.S. equities, to me, it's like, okay, maybe the Chinese markets. And again, I'm always very hesitant I want to make sure everyone knows I'm not endorsing investing in China because there's extreme risks there with Taiwan and everything. But on a shorter term basis with a small percentage of my account, I'm willing to nibble when the charts are right? And for me at least, you look at the K-Web here, the K-Web has this nice kind of bullish flag. It's really a long flag. I mean, you don't get usually year-long flag patterns like this, but I love that it has it. And then by the way, look at that candle right there, bottoming tail. That was a bottoming tail right there.
Amazing.
So again, the idea is if this can break out above here, it has some potential upside. I'm going to change back. I put my color on purple there for the white chart. Now we're going to go back to yellow, but this is your kind of level right in there. And I thought that what was interesting about today is that initially the China stocks were down, and then we saw them rebound and actually turn green on the day versus the stock market. So look at this on the chart here. Look at this is where we open it. Look at all these green candles. Like buyers just came in like crazy.
Incredible.
And now it's just kind of consolidating, but this is in reverse to what the stock market's doing, which is kind of in the opposite down here phase.
Yep.
And I think the idea here is that as money kind of exits some of these mega cap names, they're looking for a home.
Oh, yeah.
So that's the Russell maybe. Russell's down a little bit today, or China.
We've been talking a lot about, the Chinese markets on the trading floor this week and last week, and talking about how if you look at the highs on the FXI, for example, that's the large cap ETF of China, they haven't retraced their highs ever, right? They were at $73. We're down at almost $19 on the FXI. And so we're close to the lows of 2008. That's incredible. Can you see it here on my chart?
Yeah.
Right down here. This is '08, and we're a couple percent above that level. So what's interesting is, and unfortunate, for the Chinese investors is they've lost a lot of money, and now they're going and paying up 40% on a U.S. stock market that's already overbought.
Ridiculously overbought. Absolutely. So I think that's a good point. And just speaking of overbought, oversold, I'd just like to point something out is that one of the stocks, and this is a stock that I was in with members of Verified Investing Alerts, we actually took profits today. It was a nice little 5% gain on a 5% percentage of our portfolio, but it was Boeing, right? And I always love this play is like, you look at Boeing, right? And going into earnings, the stock was down from $270 to basically $200 as of yesterday's close. And so expectations are low. People are just like, oh, I have no faith in Boeing, which is when it gives the chance, like, think about someone underestimating you, like, oh, he sucks, and then it's your opportunity to exceed expectations because they're so low, versus you look at a Microsoft, which actually had amazing earnings. They really did. But again, expectations are mile high, and it's so overbought. It's now the biggest company in the market, probably one of the most overinvested allocation-wise, and it gives an opportunity for a sell the news event. So there's no doubt if you looked at apples to apples, like earnings-wise, Microsoft was way better of a report, but the stock had gone vertical, and therefore, again, it creates this opportunity for kind of an inverse relationship. Now, please be an understanding that every stock that's down doesn't mean they're going to. I mean, there's certain stocks that are down for reasons of their company, their business model is becoming obsolete or something like that.
Their margins, their earnings.
Right,
yeah,
right.
Sure.
But in Boeing's case, it's still a blue chip. It's still a blue chip. It still ultimately will make money and probably will for quite some time.
Yeah, no, I think that's a key point that Gareth has actually taught me is, if you have a stock that's going up and it's coming into earnings, the earnings have to be sky high. They have to be so much better to push that stock even higher. So definitely something to consider, coming into earnings.
Yeah, absolutely. All right, we're going to do a check back on the markets here, guys. Just going to go back to the 10-year yield here. 10-year yield still up a little bit, but honestly not that much. But will it change at 2:30 when Jerome Powell starts to talk? And again, looks like that's about 10 minutes away from now. So we'll keep looking at different charts out there and see what's going on. The U.S. dollar still with a slight gain to it as well, but really minimal gain here. I do want to go to the monthly dollar chart here. For a couple reasons. I'm going to clear off. Let's do a full breakdown of the U.S. dollar chart because I do think it's interesting. So this is the monthly longer-term chart of the U.S. dollar. And there's no doubt that you're making basically lower highs, right? So we always hear about the de-dollarization. We hear about eventually the demise of the dollar. And then everyone's surprised when the dollar still rallies up. But if you look at the bigger time frame, there's still no doubt, at least from this high, that it slowly is happening. I mean, overall, at this point, it's slowly happening. It's just going to take a long time. It just doesn't happen overnight, or literally even in a few years. Now, you do have a base point where in 2009, the dollar was kind of at its lowest point here, and it still hasn't gone back to that. But the one thing I'm watching here on this chart, if we look at this here and we zoom in just a little bit. So the short term, we have a trend line here, and we draw this down here. And you basically can see your breakout occur right there. And then I want to just draw another trend line here. So we've now gone into, in fact, that looks like a parallel to me. Let me just see if, let's erase this one, and I'm going to get rid of that again. And I just want to see if this is a parallel channel that we're trading in now. And again, parallels are amazing how price kind of continues to chop around. So what I'm doing is I'm connecting these low pivots here, right through here. So 1, 2, 3. And then I'm going to draw a parallel line. Look at that. That's cool.
Ah, incredible.
So there you go. So basically what this tells us is that since 2011, the dollar's actually been in an uptrend. But if you zoom out on the chart to like the monthly and going back like 20, 30, 40 years, you actually are still in a longer term low or high period, but you're just in a short term higher trend line here. So again, one of the things about trading is that you do have to recognize that trading is a matter of your time frame. What time frame? So I day trade and I swing trade. So my time frames are like the 10-minute chart to the daily chart generally, right? When I'm doing long-term forecasts, maybe I'll go to the weekly or the monthly. Yep. But I mean, heck, you do your minute charts.
1 minute, 5 minute, and it works.
Yeah, and it works. I'll tell you, it does work.
Actually, if you zoom out to the past 100 years, this is a chart that I show my friends every so often. This is the purchasing power of the U.S. dollar. And if you look at back here in 1910, 1920, how powerful the dollar was, but as the U.S. government continued to print money, print, you started to increase the supply of money and decrease the purchasing power. I mean, there it is in a chart right there.
And it's interesting on that chart. I mean, you could see how even when the gold standard was still in effect, it was still a downsloping chart.
Yep.
So, I mean, it's not like, just going back to the gold standard doesn't necessarily guarantee you that you're not going to get that degradation of the value of the dollar. I hate to say it, but that really comes down to governments yep. and what they're doing. But it is interesting, man. It is scary. To be honest, it's scary for your kids, my kids, and potentially what can end up happening there. Even for our retirement, how much is now it used to be. I mean, heck, my parents when they retired. I mean, I don't know exactly what they had, but they probably had maybe 300,000, 400,000, 500,000, and yep. they're fine with that. Sure. They're able to live. But for me, in 20 years, I don't know if 300,000, 400,000, 500,000 is going to work. For most people.
I mean, the cost of a popsicle in Tampa is $7, $8, and I'm wondering what it's going to be like in 15, 20 years. It could be $50.
Yeah,
so
maybe that's where Bitcoin comes in. Maybe some crypto there. You
little
never
hedge
know.
Against inflation.
Yeah.
Yeah. Just taking a look at the spiders here on the 10-minute. So you do have a pretty decisive breakdown on this bear flag.
Bring it a little bit more the other way.
Yeah, the other way.
Yeah,
the other way.
There you go.
How about that? Okay.
You just got it. Yeah, there you go.
All right, there you go.
Perfect.
Very good. So yeah, you've got this bear flag. It's broken down, and you've got some support coming up here, right around 485.36. But again. We'll see what 230 brings.
Yeah, and interestingly enough, I've got the same chart up here, and my flat line bottom right there. So we're very close to confirming. We still haven't confirmed it yet. But one of the things, and you were just bringing up levels here, I'm going to erase this other trend line here so we keep it as clean as possible. You also have a former gap and pivot high right here, which as a day trader, this might be an interesting level. So it's a little bit below these lows here, but you're coming right around 480, just a pierce of 485 right there. Could be an interesting level. We're about 80 cents away, 85 cents away on a technical basis. But I would start looking for support there. And then if we really see a breakdown, there's a gap that hasn't been filled just a little bit below here at this point. So see how, by the way, gaps, guys, just so you're aware, and I use these terms, Dr. B uses these terms, Ben uses these terms in the office, but a gap is created when a stock or a market closes one day and then opens somewhere else. So if you open up higher, it creates a gap right here. And psychologically, when price falls back to that level, this is where you're going to get support. right? So when we say gap fill, it's price coming back down to a level where we had a gap right there, and we continued on. There was a gap here as well, right? So there's a gap right here, although looks like we very closely filled it right there, but this would be another level at around 482.40-ish, give or take. But I know a lot of these terms maybe people don't fully understand, and I apologize for that. Sure. I'll try to make sure we explain as we go.
Yeah, a little more complex. So, if you were looking at this chart, trying to figure out where to get in for a day trade, right? So you've got this 48.40 level. You could definitely enter a position here, but knowing that that gap fill is lower, maybe a smaller position there, and then adding at the gap fill or maybe a pierce of the gap fill. So.
Yeah, and that's a technique that we use all the time, folks, is to leg into positions, because I think, once you trade for as many years as I think the fantasy, Dr. B, if you could correct me if I'm wrong, but the fantasy is like you get in, you get out, and everything's great, and you make millions of dollars, and that's not reality.
It's not. It's not. No.
So the reality of it is I get in probably at least half my positions, I get in and it goes lower than I think it's going to go.
Yeah.
And what you have to learn as a trader is to be ready. How do you handle that situation, right? So if you go all in, you basically don't have any maneuverability.
Yeah.
And so, ultimately an oversold chart, whether it hits that first level you showed or the second level you showed, you're going to get a bounce at some point. You have to still be in the game with your average being close enough that if you hit that, you'll get a trading or you'll get the bounce that you need for a long play, right?
Yeah, and I think that's the key, right? So, in most fields, right, most professions, you have backup plans. What if this goes wrong? Plan A, B, C, D, E, F, right? And so for me in the ER, right, I had, if something didn't work out, I had my plan B, C, D, right? And so it's the same thing in trading. You almost have to expect that level to be pierced and say, okay, no problem, it's pierced, what's the next level? Where's my next add, right? And so really maneuvering through that trade will help you immensely, take either break even on a losing trade or take a much smaller loss than you would have if you had gone in, all in for that one stock or that position size, right at that certain level. So, very important.
Very important. I just want to flip back to the daily chart here on the spiders, and we just want to go over some levels that I'm keeping an eye on. So, in other words, when we're looking at this, right, if you look at the spiders, this is by the way, when I say spiders, it's the S&P tracking ETF, so it's basically the S&P. And what we could see here is that we've been in an amazing uptrend. I mean, this is just going back to December. The markets continue to rally. We know that, again, last year the markets had an amazing year. Here's the pullback, right? So, I mean, to keep things in perspective, I mean, you look at all this upside, and that's where we are right now. So as a technician, as a bigger picture technician, you're not getting scared here. Today's down day, it doesn't matter what Amazon is or Microsoft or AMD are doing, you're not scared here. If anything, for me, I'm more scared at how overbought the markets are, but as of now, they're still fine. What I'm doing is I'm looking for my trend lines where something would show me a breakdown, like a significant breakdown. And one of the lines here that I have is this one. So if we draw this, what we can see is basically going back to November, the stock market, the S&P, has been hammering, just gently bouncing off of this. In fact, we started here on this gap up, and we bounced here, we bounced here, and we bounced here. So what I would say is, as a technician, as someone looking at the charts, you don't really get it concerned on the bigger macro breakdown unless you violate and you break below that line. As of now, this is your trend. In fact, it almost looks like you could put a parallel line right in here above there as well, right? So again, that's what you're tracking. This as an investor would start to concern me if you break that, because then eventually you start, maybe coming back and filling this gap down here, which again, there's another gap right there. We just talked about that. So again, just kind of keeping it in perspective, and we'll see what Jerome Powell says in just really about a minute time. He'll be starting to talk, and we'll see.
Yeah, and really on that daily chart, that's a bearish pattern. That's a rising channel, a rising wedge. That inherently is a bearish pattern. And so if you look at that bottom trend line, based on Gareth's methodology that he developed, that's the fourth or the fifth hit of that trend line, which should break, right? So that's definitely something we're watching closely.
And that's bringing up a fantastic educational point, is that what you start to learn when you study the charts as much as we have is that a trend line will get hit once, twice, 3 times. Usually, I mean, I'd say 70% of the time it will bounce off those times. First, second, third hits. It's when you get to the 4th or the 5th hit that you start to be concerned, just like that door, the analogy of the door, right?
Yeah.
If you have to break down a door, maybe 2, 3 times I have to ram into it. By the 4th time, 5th time, probably I'm going to be able to break that down. Same thought process here. So, you look at this, it's like, it's basically 1, 2, 3, and now if we come down, you're at 4. Once you get to 4, it's kind of like a 50-50, and then by 5, the odds, I don't know if it'll bounce there or not, but if it does, by 5, you're pretty much at that point where odds do favor it pretty sizably of a breakdown. And again, so that's just something to keep an eye on here as we continue to wait, and it looks like Jerome Powell's just about to come out and start talking, so I'll try to tune us in so we can hear his statements. I'm not sure if I can patch it through, if you guys will hear it on my mic as I'm listening to it here. But yeah, I'll relay any important points that I'm hearing. And really more than anything, guys, this happens with earnings too. Is like, earnings can be whatever, but it's really what is the price action? The price action is always truth.
Yep.
So, we may be like, oh, it's dovish or it's bullish, but if the market's going the opposite way, then that's what it is.
The market's efficient, and
market
and
knows.
The market will trade. Yeah,
Yep.
for sure. Just want to show you here as we're waiting. This was the spiders, right? We're looking at this time count on the 10-minute.
You come over to this side there.
Okay.
There you go.
There we go. Okay. So this is the spider 10-minute chart, and you had this gap down, right? Here's the gap, and then you had a down move, and this was a time count. This was 7 candles down, and look at where you started to see an up move right here at this 7th candle. So all of these different things we look at, we think about, we kind of create a recipe, that for success. So,
all right, Jerome Powell is speaking.
Inflation has eased from its highs without a significant increase in
I hope
unemployment.
it's
That's very good news. But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the 4th quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome. But we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations.
All right, guys, I'm going to jump back in here. So I'm getting the gist of it, and again, we can always tune back in, but I don't, we can all listen on our own time to this thing. So basically, initially, the markets began to bounce. Again, this is why, for me at least, with this low line here, I really want to see it confirmed to the downside before I trust it, because again, you could see, red candle closed below, but we didn't close below the lowest point of that previous candle. There's no confirmation. So you wouldn't jump the gun quite yet to saying, okay, this is a breakdown. This is a confirmed breakdown. So really important there to kind of take note of that. Now, again, I did just hear him say, the cautionary thing of saying, we still have to make sure that inflation is really coming down here. Markets, again, starting to rebound, though, liking the fact that he's certainly not pushing new interest rates.
No.
That's not in the cards. I do want to flip back to the chart here of the Fed, and let's do one more refresh to see if these numbers have changed. Now, again, the Q&A will be next. The Q&A sometimes can be decently important if the right questions are asked. Interesting. All right, so look at this, guys. So this is interesting to me. So we saw before that March was now back on the table initially after the statement, and now look, March is now off the table again. Back now. So we've moved back to it favoring no rate cut in March. So this is kind of fun to watch this and during this period. And again, this will be something that you want to check later today. Maybe we'll even look at in trading the close what's going on here. But we're now back to a 50-50 chance of a May. Now, what would be really interesting is if this starts to go below 50%, that would be getting my attention there. And it's only at 50.3%. So again, we're starting to see these drop of the potential for rate cuts. Yeah.
I was listening to CNBC on the way in this morning, and I think that the Fed really is most worried about cutting rates too soon and then having inflation go back up and then having to recut rates or increase rates. So that's the big worry here is, they're looking at the 70s with Volcker and saying we don't want to repeat that situation. It's a very, this is history, really.
Right. And I think one of the things, too, to keep in mind is that the Fed, if we slip into a recession, the Fed can always just print a ton of money to get us out relatively quickly. But if you kickstart inflation again, the question is, can you really get it back inside the box in a meaningful amount of time? And we know which way, inflation obviously hurts a majority. The really wealthy don't care. Their lifestyle's not changed. But let's be fair, most of the country is not in that group.
Unfortunately.
And that's who's really going to get hurt. So again, generally, if the Fed is hawkish, that would be a negative for the market. And again, we're starting to see us creep down again here on the S&P 500, and we'll see. Just doing a check-in on the dollar. The dollar was initially falling, which is why we saw the S&P initially rally. Now the dollar's starting to creep back up. I'm going to still watch this area right here. Let me get my trend tool back here, my drawing tool. And again, so basically I'm going to be watching this area right here. I think as long as we stay below, it's kind of a non-event. If the dollar really starts breaking up here, I think the market really goes south in a hurry as the dollar could gain strength.
Right, and just so you know, right, so if the Fed is hawkish, that means that they're going to keep rates higher for longer, which will put pressure on the economy and thus on the stock market. And so that's why you see the market pull back.
Mm-hmm. And by the way, one of the things that maybe is worth expressing here is, why are high rates sometimes bad for stock prices? And the answer is this, is that, if you can get 1% on a bond, right, let's just talk 1% here, versus the stock market where you can make 10% or 15 or last year even more, let's just say 15%, but this one, there's a chance of loss. This one, there's not. Right? So are you willing to take the risk for 15% that you might lose? And a lot of people at a 1% interest rate for 15 return, they'll take this risk. This is the one that wins out. But as interest rates go higher, let's say 5%, which we're basically at on interest rates, that now versus, let's say markets are so overbought, maybe people's expectations for further gains are a little bit lower. Now you're looking, let's just say 10%. Are you still willing to take that risk when you could lose 10% or maybe even more, and a lot more money will flow over to the bond market with higher rates? That's why money comes out of stocks into the bonds, because it's a guaranteed 5% versus the risk. Yeah, you could make 10, but you could also lose 10. So,
and I think the standard quoted rates are about 7 to 10% over the long run for gains yearly in the stock market. So as you get closer to that 7%, that 5% on the bonds, 6%, people say, it's fine. I don't want to take a risk. I'm fine with sacrificing those two percentage points, and I'm just going to go into bonds. And so they start selling equities, buying bonds, and so it's that whole movement and flow of capital.
Look at this.
Wow.
So all of a sudden, I'm not sure what he said, but something's just kicked in, a buy program in the S&P. And now this is getting interesting, right? Because it looks like not only are we potentially going to close back above that line, but if we now flip over here and we put a trend line in, this is kind of my high end here. We just closed on it. Look at that. So we just closed on. If you connect this high to this high, we basically closed right there. So this to me is the make or break candle. If we can continue up, then you potentially could really see a rally in this market. But if it's going to get rejected, now the breakdown's already failed, right? So there's no confirmation, and thank goodness, right? It didn't tell us there was, and you could see what the market does. And by the way, when you have a Fed decision, if you're trying to trade this whip, God bless you. You're better than me.
Good
right?
luck.
Like,
Stay away.
Like this is what they call, like, makes you Swiss cheese. Your account Swiss cheese. It just chops it right up. But anyways, let's keep an eye on this as we go here. I'm going to assume, and we're starting to downtick again. They're trying to kind of figure it out here if it's going to break to the upside. Next resistance would be right here, right? So you have the high of the day. That's right up here. That'll be your next resistance. And then if we break through there, you got some levels here, and then eventually gap fill right up there. And again, there's another gap. We closed there yesterday. We opened down here. We sold off. And if we got back up there, that would be gap fill. And again, looks like we're starting to uptick just a little bit again. They're trying to get this market going.
Yeah, 10 years back below 4%. And we'll see. If the markets keep rallying, the 10 years should fall.
Yep.
So
and look at that drop in the dollar. So see this really big red candle in the dollar, and then we just flip over to the spiders and look at the really big green candle. That just shows to everyone out there the inverse relationship that the market's have. And I'm a big believer that this isn't humans necessarily. I mean, humans are trading in here, but there's no way that they can be that dead on to the ups and downs. So it's really algorithmic trading that's going on here. And again, look at this, starting to move up here. So next resistance on the spiders. Now, as a trader, I probably won't short this gap window. This is called gap window. This is called gap fill. But if we got to gap fill on a straight line, that might be might be a nice little short there for a day trade. Again, these are day trades, mind you. So again, just keep an eye on that. But we'll see. We're still below. And by the way, this candle could reverse back down. We still got a lot of time left in this candle, about 8 minutes to go before this 10-minute candle closes.
Volume's inching up. It's about 45 million shares traded. So, maybe by 3 o'clock, we might see 50 million, 60 million. So still anemic for the day, but we'll see what happens.
Yeah, and here you can see Bitcoin's chart. So again, this is your 10-minute chart on Bitcoin. Bitcoin actually rallied up nicely going into the decision. Then it kind of dumped out a little bit, and now it's rallying back. And Bitcoin, again, same kind of deal. It still trades generally inverse to the dollar. Right, so the dollar as it falls gives Bitcoin a bid. The dollar is jumping over here, which caused Bitcoin to come down just a little bit. I'm going to check in on, let's see what Boeing's doing. Yeah, Boeing's at 213. Nice move there. Microsoft's had a good bounce here. A nice little bounce there on Microsoft. Let me just see here on.
How about Google? Google was beaten down this morning, right?
Yes.
Let's see. Google's starting to get a bid as well.
So we'll see. Can the markets recover after these earnings? And this is the chart of Microsoft. You could see, just like the spiders in a way, if you kind of have this channel-ish type deal, and we're now right at the high end of that channel, trying to break out of this downward sloping intraday 10-minute channel to see if we can get a bigger gain there. But yeah, let me just go to that Google chart here. Yeah, Google, a little bit of an uptick, still down precipitously on the day for Google, but yeah, beautiful little move there. Checking on NVIDIA. Oh yeah, NVIDIA's caught that bid. You know it will. That's one of the favorites out there. Now look at where NVIDIA is on a technical basis. NVIDIA just tagged gap window right here. So if we draw a trend line from basically the high of the day, we're now actually pushing above it just a little bit here and starting to see a push up here. So again, NVIDIA there, you had the drop, the chop, trying to break. If it breaks successfully, this is your target zone right here. That's going to be gap fill, a lot of resistance going into that. A lot of people that bought yesterday on NVIDIA, they woke up this morning to the gap down on AMD's earnings, the flush. They were a little panicky. So the thought process is if it rises back to that same level right here, there'll be some sellers here looking to unload and just be thankful they get out flat to break even on their trade there.
Yeah, and just look at Google. My eye goes to this inverse head and shoulders pattern. You can see right here. Looks like it's triggering right now. Another thing I see here too is this, again, this bullish divergence on the 10-minute, right? So if you were to take a trend line from here to here, and then a trend line from here to here, you can tell that there's a divergence. So yeah, keep an eye on this.
One other chart to show you guys, the VXX. I only bring this to your attention because I was telling the live trading room about this earlier. I know a lot of them are watching right now. But basically, we had a swing trade in Verified Investing Alerts where I was long about 7.5% of the portfolio in VXX. I was in the money. When we were at the highs of the day today, I was in the money, just 1% or so. But I said to myself, listen, historically, there's a lot of volatility, or VIX is being bought up because the people fear the Fed, right? The Fed's going to do something on, so they're buying protection, especially after these earnings that we've seen. And so the VIX was up, and I took half off the table at just up in this upper range. It was a small gain only, but sometimes a small gain is smart to do, especially when you have a decent size of your portfolio in a trade. And you can see what's ended up happening is the Fed comes out, they're not shocking the market, they're not panicking the market, and so volatility starts to get sold, and just like that, it's about a 50-cent drop on the VXX from where we unloaded that half. And again, unloading half, it doesn't mean that if it continues up, I still have that second half, but if it drops, I can re-add that at a better price, let's say down here, and it brings my dollar cost average down. I'm able to pocket that profit, get in the rest at a better price. So little things like that make a huge difference in a portfolio.
Huge difference. I actually started, employing some of Gareth's strategies in that sense, and it's incredible. Just de-risking, and then your ability to buy lower is so important. If you're all in on a position, 5/5 of a position, you're handcuffed. You can't maneuver. So that's really the key, is maneuverability.
And again, we'll probably jump off in just a minute or so on this stream, guys. But I just wanted to show you. So again, look at where did we go? Where did the spiders go? Right up to resistance here, and now they're starting to stall just a little bit. Doesn't mean they can't break above it, but you just have to know your levels. Know your levels. I always liken this, like I don't really think drawing these trend lines are that, it doesn't take a lot of skill. It's basically like, okay, what was the high on there? Put the line there, and then you just connect the dots, here to here and to here, and you get this level down here, and same thing with connecting these up here as well. So it's just, it's connect the dots like when we were kids and we used to do those games, but it actually has a purpose in this scenario to help us make money in the markets and understand where things are going to hit that they could have resistance.
For sure.
So, all right, guys. So, yeah, this has been fun. I don't know. I don't have much else to say. Anything else to add today?
No, it's been great. Yeah, very interested to see, how it goes here.
Nice.
All right, take care.
All right, guys. You guys have a great rest of your day. Thank you so much for tuning in. Come check out Verified Investing and watch for that new website. It'll be awesome. But thanks again, guys. I'll try to do this every Fed decision. Hopefully you guys found it useful. Please comment below. Let us know your thoughts. Is there anything we should talk more about? Is there anything we missed? Let us know, because I want to improve these and make them the best stream for all of you. You guys take care. Have a good one.